Good morning, it's Harvey Jackson. Just going to go through top news items. The main one is actually StatScan review here that I'm going to look at. And Trump making the news, or there's some trade deals getting done. So here's the news that come out of the White House there yesterday, and just kind of setting the framework for some of these things that he needs to get done. And you can see that the United Kingdom came to the plate, and they were the first ones to actually get the trade deal kind of done. And again, it's not done. It is the framework to get done, taking away a lot of the non-trade barriers, you name it. And at the same day, they actually go and decrease interest rates, and uh, they're losing some ground on the U.S. dollars gaining against them. So it doesn't help their trade deal very much if their currency is going to be helping them export product, just like our Canadian dollar is falling apart here as well. So here I put this in the title, maybe just a little wee bit, but he says buy stocks right now, and that problem all by itself is, I think a lot of it is the China talks that they're going to have over the weekend that he's all excited about, and if there is some sort of deal, then that's probably going to shock the market, and if that does happen, the S&P will probably take off from where it is, and yeah, it would be good for the world economy if you get some of these bigger trade deals done. So this one here is going to be a little bit lengthy, but Mitch Miller just kind of analyzed each commodity, and maybe I'll just touch base here. Canola is actually bullish, even with the number. I know some analysts were saying it was going to be a little bit less than 5.8, like down to 5.3, but this carryout is ultimately a very tight carryout. Puts us back to almost similar levels that we've had in previous, very tight, right? So if you look at this, we are quite tight here. So canola, it had rallied when we were in this kind of a tight position before, but I think it was known that we were tight before this time of year to actually get the big rally. And yeah, we'll just leave it at that for now, because they were running tight way before this. Because right now, I don't think any crusher or exporter had any issues getting their hands on it, and it didn't drive up the market. and Europe wasn't in the same as big of a drought situation from last year's production as well. So a couple other things I want to note here is oats is actually quite tight here as well. Other than 2021, you have to go back to 2003 to find any tighter stocks than you have here. Just noted in this part of the article here as well. Wheat stocks very meh. Didn't really make any big substantial changes there. On the pulses though, it looks like there's a big increase, and what Mitch is talking about here is it's actually closer to normal values. So that's this part of the article right here, where he says on the pulse side, dry peas stocks did recover, with March 31st supplies up 42% from last year compared to 0.955 million metric tons last year. This is worth noting that 2024 marked the lowest total since 2008 and 2018, marking the highest this century at 2.2. Even though 42% increase on cereals, it's just returns the stocks to normal levels. And the same thing with lentils, because if you just looked at it in a vacuum, it would actually be bearish, and it's not necessarily bearish. Another one that I might have talking about is the flax stocks fell as well. So Bill from the U.S. here, he actually talked about this a little bit here, and China actually canceled orders of beef, and I thought that was pretty substantial. But you can see the pace that they're shipping and export commitments. It's actually way ahead of pace. Drought monitor, you can see the areas of concern here, and Florida, right? So you got those two big areas and possible building in this area, but we'll have to see how that kind of conforms. This is just looking at class changes, and I do pay attention to it every now and then, and you can see that there is some class changes in this area that it's worth paying attention to. Really, no big shifts. Like corn, soybeans stayed the same. Spring wheat stayed the same. Winter wheat actually reduced a little bit. So there's no real big drought. So here, this is on the AgX weather channel that I pay attention to. So here's, you got June, July, August, and it's showing some drought in this area here. So it may, if these long range forecasts come about, well, you could see some drying out in those areas. And the same thing, just even in your 8 to 14 day, it looks wet up here. So I think it's going to be welcomed in the area that I kind of travel. And you can see you're almost getting like 2 inches of rain in these areas. So if that were to come about for the next 2 weeks, I think everybody would actually welcome it. So canola, you get the front month up and the back month down. Rapeseed, basically flat, but a little wee bit down. Soybean oil up a little wee bit. Crude oil is up again. Now we're over $60 a barrel on the West Texas. Soybeans up, and your wheats are all up, and your Canadian dollar is basically flat. Let's just have a look at it here. This is kind of hitting some sort of resistance here at the $700 mark. And if we had shown more time in there, you can see that we've got to these highs, and now we're kind of teetering here. Now, will this StatsCan and more shipping, more buying put some pressure on it? So this is old crop, and this is definitely a range where there's got to be some consideration for some sales. Like just even if we just look at this individually, just like those highs right there that we made, we close to 665 to 670, somewhere in there is actually a good area because you've hit it a few times already. Old crop versus new crop, we're at $42. So that is a pretty big spread between November contract and and July. And one weather scare, this all goes away. Then all the pressure goes, or all the money goes, or everything will go to November, because July is old crop and the new crop is November, right? So the good rains in the forecast are not going to necessarily hurt canola, but it kind of left some big pockets in Alberta and western part of Saskatchewan, canola growing area, absent of rain. Here's your European rapeseed, and $83 difference on it, and this is again your NOV contract, right? Soybean oil, and you can draw your charts anywhere you want, but it looks like it's bouncing off the 61.8 retracement. If you just looked at this short timeline here, that's in the screen, so that does suggest that you could actually go up if that's in fact the right place to draw it. Soybean futures, same area. And looking at crude oil, this is a bit of a recovery. Probably look at it getting back to that 63 before long. Here's your Canadian dollar. Pretty a deep red day yesterday, and a little bit of a recovery, like I said. But I believe that there's a very good chance that we could continue to go there, especially if the U.S. gets some trade deals done. It would favor monetary policy, or not monetary policy, but money going to the U.S. dollars. Look at wheat, still in this downward trend. Same thing when you look at this in a weekly basis for Kansas. It looks like we're trying to make new lows when we look at it, but this is going back quite a few years. But looking for some sort of support there. Corn futures, it's basically broken through a longer term trend line and trying to turn positive here. Here's your live cattle. So here, let's leave the best for last, I guess. It making new highs, and the same thing with your feeder cattle, trying to make new highs. So we're above the 301 now. We're trading right at the 301. Broke the 300 value yesterday. And your lean hogs basically just kind of going sideways here. So look forward to the USD report on Monday.